assets for yourself, you have good investments, we know that one life circumstance can change all that. So when we talk about covering your assets, what we mean is managing the risk in your life. And there are ways to manage risk. In business, what we do, we actually do risk management plans in business. When you own a business or you run an agency, we're always looking for things that could jeopardize our financial security. Your personal income, your personal finances should be no different. What are the risks that we run? One of the risks is carrying a high level of debt. Again, as I talked about before. Another risk that people don't realize is maybe having the same partners working at the same employer. If the employer goes out of business or goes under, instead of losing one income, you lose two. That's a risk, poses a risk to you. A critical illness or an injury, not being able to work, can pose a risk to all of that financial security that you built for yourself. So it's really important to examine what risks you face. And what risks are you willing to accept, and what risks might you want to transfer? Are there actions you can take to reduce that risk so it's not so dangerous or threatening to your financial security? What can you do to prevent them from occurring? What can you do to minimize their impact? And what can you do, more importantly, to recover if something happens? So having a good idea of the risks you face financially and the kinds of things that can derail your financial plan helps you be able to plan more carefully for those types of risks so that you're not in jeopardy or in financial crisis the immediate moment that one of those life events happens. Because we know from experience it's not a question of if, most times it's a question of when. And how can we prepare ourselves well to be able to cover those assets for ourselves? And of course, you've got assets, you've made the risk assessment, you've decided what you're going to assume, what you're going to transfer, and what you're going to help mitigate the risks. There's also some financial planning that has to be done for the future. So in terms of assuming risk, you might want to purchase life insurance. It's also important in order to protect your assets to have a power of attorney for property and health. We call it a general power of attorney. This is all part of healthy finances, to be able to make the transition. Should you build a pot of wealth, how is that going to transition to the next generation? How is that going to transition to your partner or your family should something, God forbid, happen to you in the meantime? So we talk in terms of planning for the future, having life insurance to be able to provide for your family should something happen to you or your spouse, having a power of attorney so that your assets aren't frozen and that business can still be conducted and that the bills can be paid should you not be capable of doing that yourself, having a will so that the property that you've worked so hard for transitions smoothly to your beneficiaries, and of course estate planning. You want to do all that without paying a lot of taxes. So that tax minimization, not only for transferring your estate, but for drawing down that wealth once you reach retirement age. So you want some tax minimization strategies. So the 10 steps to financial fitness are building self-awareness, identifying your values, setting some goals for yourself, securing an income, managing your debt levels, creating a savings plan, creating a spending plan, building assets, protecting those assets, and planning for the future. I hope you found this information helpful. Good luck with your financial fitness.